and make America great again.
Make America great again.
And we will make America great again.
Delve into the ominous realm of hyperinflation, an economic catastrophe characterized by uncontrollable price surges. In this exploration, unravel the causes, real-world examples, and potential consequences of this financial storm. Embark on a journey into the intricate dynamics of economic catastrophe as we unravel the mysteries behind hyperinflation. In this insightful video, we delve into its causes, real-world examples, and the potential repercussions, offering a comprehensive understanding of this financial storm that can reshape entire economies. Before we start our videos, make sure to subscribe to our channel and hit the bell icon for our upcoming uploads. So without further ado, let's dive in. Hyperinflation is a financial disaster that can have devastating effects on economies, causing rapid and uncontrollable increases in prices. While it is a rare occurrence in developed economies, it has been experienced by countries such as China, Germany, Russia, Hungary, and Georgia. In this exploration, we'll delve into the intricacies of hyperinflation, understanding its causes, real-world examples, and potential consequences. Hyperinflation is a phenomenon characterized by extremely high and accelerating inflation rates, typically exceeding 50% per month. Unlike normal inflation, which measures the gradual increase in prices for goods and services, hyperinflation is a severe and rare scenario. Developed economies, like the United States, aim to maintain stable inflation rates, usually around 2% over the long term. Inflation is commonly measured using the Consumer Price Index, CPI, which tracks the prices of various commodities and services. Hyperinflation represents the extreme end of the inflation spectrum, with inflation rates of 50% or more per month. During hyperinflation, prices can increase on a daily or weekly basis, significantly impacting consumers' ability to afford basic necessities. Causes of hyperinflation. Several factors contribute to hyperinflation, and understanding these triggers is crucial in preventing such catastrophic economic events. 1. Excessive money supply. One primary cause of hyperinflation is the uncontrolled expansion of the money supply. Central banks, responsible for regulating the money in circulation, may increase the money supply in response to economic crisis. However, if this monetary expansion isn't accompanied by actual economic growth, it can lead to hyperinflation. 2. Demand pull inflation. Another catalyst for hyperinflation occurs when aggregate demand outstrips aggregate supply. In such scenarios, there simply aren't enough goods and services available to meet the surging demand, resulting in rapid and uncontrolled price increases. Effects of hyperinflation. Hyperinflation unleashes a series of disastrous effects that wreak havoc on an economy and its people. 1. Hoarding and shortages. As hyperinflation sets in, people tend to hoard essential goods, fearing that their money's value will diminish further. This hoarding leads to shortages, making it difficult for ordinary citizens to secure basic necessities. 2. Purchasing power erosion. Hyperinflation significantly devalues the local currency, rendering it nearly worthless. Consumers experience a loss of purchasing power, meaning they have to spend more to buy less, and bills become burdensome. 3. Bank failures. With the local currency rapidly depreciating, individuals may lose trust in the banking system. They often withdraw their money, causing financial institutions to falter and, in some cases, collapse. 4. Government revenue decline. Governments dependent on tax revenues for essential services suffer during hyperinflation. As consumers and businesses struggle to make ends meet, they may default on taxes, leading to a decrease in government income and disrupting public services. How to prepare for hyperinflation. While hyperinflation is rare in developed countries, prepared for high inflation. Diversifying your portfolio with assets like commodities, real estate, and Treasury inflation-protected securities, Type ES, can help hedge against rising inflation. Considering mutual funds and exchange-traded funds that utilize inflation swaps can safeguard your portfolio from the ravages of inflation. Real-world examples of hyperinflation. Several countries have experienced severe bouts of hyperinflation, leading to economic turmoil and widespread suffering. Here are a few notable examples. 1. Yugoslavia, 1990s. Yugoslavia faced a destructive episode of hyperinflation, with an inflation rate doubling daily, reaching an unimaginable 313 million per month. The crisis left the nation's wealth obliterated, and its populace had to resort to bartering for basic necessities. 2. Hungary, post-World War II. Hungary experienced hyperinflation following World War II, with prices soaring at a mind-boggling rate of 207% per day. Factors such as excessive government spending, fiscal mismanagement, and a loss of confidence in the local currency contributed to this catastrophe. 3. Zimbabwe, 1999 to 2009. Zimbabwe underwent a prolonged period of hyperinflation, with daily inflation rates hitting an alarming 98%. Triggered by events like droughts, a plummeting GDP, excessive borrowing, and government involvement in expensive ventures, the country's currency became nearly worthless, forcing millions to flee. Potential for hyperinflation in developed countries. While hyperinflation is unlikely in developed countries like the United States, economists and central banks closely monitor inflation. The Federal Reserve has various tools to prevent hyperinflation, such as adjusting interest rates. The robust economic institutions and prudent fiscal policies of the United States make hyperinflation improbable. However, extreme economic conditions or significant policy missteps could theoretically create a risk. In conclusion, hyperinflation is a rare but severe economic nightmare that can disrupt entire nations. While developed countries have mechanisms in place to prevent such occurrences, it's essential to remain vigilant and prepared for economic uncertainties. Diversifying investments, staying informed about economic indicators, and understanding the causes and consequences of hyperinflation are crucial steps in navigating potential financial storms. So don't forget to subscribe to our channel and hit the bell icon for our upcoming uploads. Until the next time, goodbye.